Good morning, you all. Welcome to our today's session. Today we are doing budgeting and budgetary control. This is a topic on management accounting, and budgets are not something that is new to us. These are the things that we project to do every day. So, when we discuss about a budget, we look on it's just a financial statement, which is basically used to project the expected revenues, right? It is normally used to project the costs, assets, and the liabilities, and the cash flows of the organizations. So let me just say this: a budget is a financial statement. A budget is a financial statement which is used to project the expected cash flows or the expected revenue, costs, assets and liabilities, and the cash flows of the organization. So these are normally prepared. In most organizations, you normally find that they prepare their budgets at the beginning of the year. For example, most of the companies you might find they are running from January to December. And the reason as to we normally come up with budgets is because we just want to work, or the organizations want to grow. And the growth is basically depends on the set goals within the organization. So that is why they are setting the goals so that they can be able to work on during the year. So there are 4 types of budgets. All right. So the first one, we normally talk about the functional budgets. The functional budgets are just budgets which are normally, these are budgets which are normally prepared by different departments and forwarded. They are normally prepared by different departments within the organization. And these budgets are normally forwarded to the management and then they are normally forwarded to the top management. They are normally forwarded to the top management for approval. They are normally forwarded to the top management by approval. So, for example, these budgets normally include, we are talking about sales budgets. Talking about the sales budgets, we normally have a production budget. We normally have something called the material usage budget. We normally have material purchase. Purchase budgets. Then we normally have labor. Budget, etc. Those are the most common types of budgets that you are going to be working under the functional budget. They are all tested in an exam. And later on, we'll be able to do an explanation to understand how do I normally come up with a sales budget? How can I prepare the production budget? How can I be able to prepare my material usage budgets? How can I be able to come up with the material purchase or the labor budget? We're going to be doing that. Number two, we normally have a budget called the cash budget. We normally have cash budget, yeah. And when you look on the cash budget, this is a budget. It is a budget which normally, cash budget is a budget which normally shows the cash flows. Normally shows the cash flows. It normally shows the cash flows. They normally show the expected. This should be the expected cash flows. The expected cash flows of the organization. When you're preparing the cash budget, we normally exclude, right? We say non-cash items, such as depreciation, non-cash items such as depreciations are normally excluded. Things like depreciation are normally excluded in the analysis. When we are preparing the cash budget, we're not going to be including things like depreciation. There is a question which I've seen tested recently. They have already included depreciation in a certain expense. So in this case, it means we have to be deducting the depreciation because it cannot be included in the analysis when you are coming up with a cash budget. Number three, we normally have flexible and fixed budgets. Flexible and fixed budgets, right? Very important thing here, when you look at it, it seems to be two types of budgets, and they normally interlink. It is very important to understand what is the meaning of the fixed budget. And we say a fixed budget is normally drafted or is drafted. A fixed budget is normally drafted at the beginning. It's normally drafted at the beginning. It's normally drafted at the beginning of the accounting period. It's normally drafted at the beginning of the accounting period to reflect. It's normally prepared at the beginning of the accounting period to reflect the expected. To reflect the expected performance. Normally prepared at the beginning of the accounting period to reflect the expected performance. In this budget, the number of the units produced is unknown in that case. And therefore, the actual production might be different from the expected production. The reason is where you normally find that we are preparing it. We are saying that it's just to assess the performance of the management, and this can only be achieved when the budgeted units are equal to the actual units produced. We are just going to be looking at it in that manner. But there is an aspect here which you have to be looking at regarding the flexible budget. And when you look on the flexible budget, when you are looking at the flexible budget, we are saying it is a budget. It is a budget drawn at the end. At the end of the accounting periods. It's normally drafted at the end of the accounting periods to adjust the budgeted units to match to match the actual production. Match the actual production. We are saying very simple. A flexible budget is going to be prepared at the end of the accounting period to adjust our budgeted units to match the actual production. You might be asking yourself, why do we have to prepare it at the end of the accounting period? And we are saying the number of the units produced are equal to the budgeted units, and therefore the difference will be due to the changes in the selling price, variable cost, and the fixed cost, right? But we are saying that when the budgeted unit is normally, when the flexible budget is drafted, then the variable costs and the sales volumes are normally adjusted. So in this case, we are saying the purpose of preparing the flexible budget within the organization, because we are adjusting what we prepared at the beginning of the accounting period to match the actual performance, is due to the challenges, or it is due to the flexible budget is going to be prepared to motivate the employees within the organization. That is why we are coming up with a flexible budget. The reason, because every time you see you are hitting the target of the organization, then it means you are on the right direction. You are on the right direction. So that is the reason as to why the flexible budgets are basically prepared. And that is more of these are the main, let me just say this, these are the main types of the budget and which are normally tested. But the last one is normally called master budget. It is not tested. The master budget, I just be able to tell you to go and research about it, right? But it is just a type of budget whereby you're going to be incorporating the financial statements. When we discuss about the master budget, we are saying it is just a budget which comprises of the cash budget, income statements, and the statement of the financial positions. So in this budget, the balances from the cash budget are recorded in the statements, in the statement of the financial position. So it is normally incorporate three types of the financial aspects, and it has never been tested. So we are not going to be focusing our attention to the master budget. I just want to do some two questions from each type of budget for better understanding. Then from there, we shall be able to conclude about the budgeting and budgetary control. We will be able next time to focus on other topics. So allow me just to do some illustrations here. I'm going to be starting with May 2017, question 5B. May 2017, and I know you have the past papers with you. So you just need the past paper and a calculator, and then you participate. So someone is going to be reading for me this question. Let us start with Laura. Laura, to read the question, please. Laura, I can't hear you. Someone else can read, please.
Okay. Maramat Limited manufactures a single product branded PQ. The budgeted sale for the month of June 2017 amount to 10,000 units at a selling price of Shilling 2,000 per unit. Additional information: 1 unit of PQ requires 2 components named X and Y as follow. Component number, unit cost of each component. X number 5, unit cost 20 shilling. Y 3, unit cost 10. Stock at the beginning of the month are budgeted as follows. 4,000 units of finished goods at unit cost of shilling 1,050. Component X 60,000 units at unit cost of shilling 20. Component Y 9,600 units at unit cost of shilling 10. Production cost of each unit requires the following labor hours. Department we have production and finishing. On production, we have hours per unit 4, labor rate per hour shilling 100. Finishing, hour per unit 2, labor rate 140 shillings. Can you scroll down, please? Factory overhead is absorbed into unit cost on the basis of direct labor hours. The budgeted overhead for the month is shilling 1,920,000. Administration, selling, and distribution overhead for the month are budgeted at 5,500,000 shillings. The company plans a reduction of 50% in quantity of finished goods at the end of the month and increase of 25% in the quantity of each input component. Required for the month of June 2017, sales budget. 2, production quantity budget. 3, material usage budget. 4, material purchase budget. Direct labor budget. Budgeted profit and loss account. Can you please scroll down?
We are just having, thank you so much.
And budget.
We are just having 5 requirements, around 6 years. And the examiner has given us a good information up here regarding to what we're supposed to be doing. For example, I can see we have been told that the budgeted sales for the month of 2017 amount of 10,000 units at a selling price of 2,000 shillings per unit. We have been told that in additional information, we are going to be using the components of X and Y. And in this case, we are told that they are going to be used as follows. We are given some numbers and the unit cost of each component. When you look on number 2, they have already given us the beginning balances for the raw materials and the fixed goods. When you look on number 3, we are just going to be discussing issues regarding to labor. And I can see that our products normally passes through the production and the finishing departments. Then later on, we have been told that the factory overhead is absorbed into the unit cost on the basis of the direct labor hours. So the budgeted overhead for the month is 1920. Administration, selling, and distribution overheads are already given there at 5.5 million. Then additional number 6 is going to be helping her to sail through by being told that the company plans a reduction of 50% in the quantity of the finished goods at the end of the month, and they increase the 25% the quantity of each input component. So the requirement number 1, which the examiner wants us to work on, the first one is all about, examiner is asking us to come up with a sales budget. Number 1. Sales budget. So how are we going to be getting our sales budget? We are saying, can we be able to take our budgeted? We take our budgeted sales, we multiply by expected selling prices. So when I look on the question, we are being told the budgeted units are 10,000 shillings, 10,000 units. Then the budgeted or the expected selling prices, the expected selling prices is 2,000. It is 2,000. So in this case, it means the total should be Kenya shillings. It should be Kenya shillings 20 million. If you take your calculator, you multiply 2,000 times 10,000, you're going to be getting 20 million. 20 million there. 20 million. Now, number two, the examiner is asking us to compute the production budget. So when you think about the production budgets, I know very well you know the formula to compute the cost of sales, right? Just take, for example, let us take the purchases to production. So in this case, it means if I want to get the production, the number of units that we were able to produce, I'm going to be taking my sales. I add closing stock minus opening stock. So what is the budgeted sales? So in this case, we are budgeting budgeted sales in units, the 10,000, right? Then we have said we add our closing stock. Then we leave it at that point. First, we have to be capturing our opening stock. So what is our opening stock in this case? When you look on this question, in note number 2, we are being told that the stock at the beginning of the month are as follows: 4,000 units of the finished goods at a unit of 1050. So in this case, we are going to be taking our 4,000 here. Because in this case, when you are dealing with the production budget, we normally take the finished. We deal with the finished goods. But what about the closing stock? What about the closing stock? We are being told very well here. In note number 6, they are saying the company plans a reduction of 50% in the quantity of the finished goods. So it means there is a reduction of 50% of our finished goods, which is we are anticipating the reduction of the opening stock. So here we multiply with 4,000. So in simple terms, it means our closing stock will be 2,000 shillings, 2,000 units, sorry. So what is the number of the units produced? Our units produced will be 8,000 units. The units produced will be 8,000 units. Number three here, we are discussing about material usage. Material usage budgets. And what are we using here? We are using two components. In this case, we are using component X and we are using component Y. We are using two components, X and Y. So what you have to be capturing here, we talk about the units produced. We capture our units produced. So we are producing 8,000 units. So you put both there. 8,000 in that case. But when you look on note number 1, we have been told 1 unit of PQ requires two components, namely X and Y. You have seen we have captured there. But the components are already given. So it means, in simple terms, in that note, it means the examiner is just telling you, when you are dealing with X, 1 unit, to make 1 unit of X, we require 5 components. You ask yourself, what about 8,000? 8,000 in units. So I can just multiply here direct with 5 and then multiply with 3. So how much are we getting here? So this one should be 40,000 units. And the other one should be 24,000 components, 24,000 components there. Now, there is also another requirement. That is how easy it is. Requirement number 4 is telling us to compute the material purchase. How much are we going to be purchasing? So the material purchase budget, we are going to be purchasing 2 components, X and Y. Correct? So it means what I'm supposed to be capturing here, it is the material used. Right? To determine how much you're going to be purchasing, first we have to be taking the material purchased, material used. So here it will be 40,000, here it will be 24,000. Correct? We add closing stock. We add closing stock. Right? Then we less opening stock. We less our opening stock. So in this case, when you look on the opening stock of the 2 components in note number 2, and now we are looking on the opening stock of the raw materials, I can see the examiner is telling you there is a component X there, which is having an opening of 16,000. Then the other one will be, I can see we have 9,600. We have 9,600. We have 9,600 there. Then when you go back to note number 6, it's giving us an information regarding to all this. It is telling us the company plans a reduction of 50% in quantity of the finished goods at the end of the month and an increase of 25% in the quantity of each input component. So in this case, it means the closing stock in this case will be increasing by 25%. So we just need to take 125% of the opening stocks. So the first one will be 16,000. When you take 125% of 16,000, I think we should be having 20,000 here. We're going to be having 20,000. Let me confirm with my calculator. 1.25 times 16,000, getting 20,000. Then we have 1.25. I multiply with 9,600. We are getting 12,000 here. So how much is the material purchase? Material purchases. How much is the material purchased? So I take, let me start with the Y. 12,000 plus 24,000 minus 9,600. We are getting 26,400. Then the first one will be 60,000 minus 16,000, getting around 44,000. Getting 44,000. Note number 5, the examiner is asking you about the labor budget. Labor is all about what you are producing. Labor is all about whatever you are producing. Laura, okay. Tell me what you have to do. Nimekuacha wapi? Let me just know. Let me just know. Nimekuacha wapi? Now let us look on the labor budgets. When you are dealing with labor, we are looking at the departments which are affecting our labor. The departments which are already incorporated in our labor budgets, one will be production. One will be production. The other one will be finishing. Production and finishing, right? So what are we going to be capturing here? What am I going to be capturing here? number 4. Okay. The material purchase, because I have said another material purchase, we have to be taking our material usage, 40,000 and 24,000. So the material used, you can see we have picked the two components which we are using to make our PQ. So the opening stock is already given in the additional information number 2, right? You just capture there for the raw materials. Now here we are not dealing with the finished goods. We are dealing with the raw materials. But in note number 6, we've been told there is an increase. There is an increase there of the 25% in the quantity of each input on when you are factoring the closing stock. And I have said if there is an increase of 25%, we just need to take 125% of 16,000 to know the closing stock would be more than the opening stock by 25%. That is the simple term the examiner is using there. So in that case, when you are looking at the material purchase, you just do your summations. You just do your summations there. Now, I was just explaining the aspect of the labor budget, and I've said when you are dealing with the labor budget here, when you are dealing with the labor budget, we have said, let us look on the units which we produced. The units produced in this case, it is 8,000, right? So these 8,000, they have to be passing through the production. They have to be passing through the finishing departments. So here I just need to take the units produced. We just need to take the units produced. The production will be 8,000 units. 8,000 units here. Like that. 8,000 units, right? Now, when you look on the additional number 3, the examiner is telling you that the production cost of each unit require the following labor hours. So 1 unit will be requiring 1 unit. Will be requiring 4 hours. 1 unit will be requiring 4 hours. So in simple terms, 4 hours in production, in simple terms, you can just be able to multiply here. Here you multiply by 4, here you multiply by 2, right? This is at 2,000 hours. This is 16,000 hours. So if we want to convert this into money, you just need to multiply how much is the cost per labor per hour, the labor rate per hour. For production, we have been told the labor rate here is 100. And on the other side, we have been told it is 140. Very good. So this will total to Kenya shillings 3.2 million. And the other one will be 16,000. We multiply by 140, getting 240,000. 240,000 shillings. That 240,000 shillings. Any question at that point? Any question? Any question? Now, if we don't have any question there, let me do the last requirements. Let me just do the last requirement of the question. Okay. The examiner is asking you about the budgeted profits. And loss account. So we'll fungua 2 accounts here, 2 columns of Kenya shillings. Let us start with our sales. How much is our sales? The budgeted sales we have already computed and we were able to get 20 million. So in this case, I just need to take the 20,000 there. Then we go to, we less the cost of sales. We less our cost of sales. So in this case, we start with the opening stock. Our open stock of the finished goods as per the question is 4,000. The cost per unit is 1050. So when you take 4,000 times 1050, we're going to be getting 4,200. This information is not number two. Not number two. Then we have our production. How much is our production? Remember we said the production will be, how many units are we producing? The units produced, we said, is 8,000. We are just going to be using a cost per unit of 1050. 1050 shillings. So it will be 8,000 times 1050, getting 8,400. Yeah. We have the closing stock. How much is our closing stock of the finished goods? And remember we said the closing stock of the finished goods is 2,000. 2,000. When we were calculating the units produced, we got 2,000. So the 2,000 also you multiplied by 1050. So 2,000 times 1050. We are getting 2.1 million. So what is the total of the cost of sales? It will be 4,200 plus 8,400 minus 2,100. Getting 10,500. What is your gross profit? What is your gross profit? I say 20,000 minus my answer, I'm getting 9,500. We less expenses. How much is our expenses here? When you look in note number 5, we have been told that there is administration, selling and distribution. Administration, selling and distribution given as 5.5 million. What is your net profit? My net profit would be 4,000, 4 million. It will be 4,000 there. The net profit shall be 4,000. That will be the net profit. Any question? Any question there?
No question.
No question, no question. Let us do another question here. Tested on question 4B, September 2021. Let's look on another illustration. Let's look on September. September 2021. Costs. Let's start from here. I'm just looking for it. So we are doing September 2021, question number 4B. MK Enterprise produces and sells two products branded M&K, which are used as the raw material in the production of wall paints. So the cost accountant will provide the following monthly data for budgeting purposes. They have given you the sales level, opening stock material required, labor hours required. Then we have additional information there. They have told us that the material cost as follows: X per kg is 100 shillings, Z per liter is 70. So the labor costs are as follows: skilled labor per hour is 120, semi-skilled labor per hour is 80. So the closing stock of material and finished goods will be sufficient to meet 10% of demand. So the opening stock for the material X was 3,000 kgs, and for material Z was 1,000 liters. So number one, the examiner is asking us to come up with the production budget in units, material usage budgets in kilograms and liters, material budget in kilograms, liters, and in shillings. Then the last one, examiner is asking us the labor budget in hours and in shillings. So that is the question already given, similar to what we have done. It's not hard. So you're just going to be following up the same process. So we are starting with the production budgets. And when you are doing the production budget, it means we're just going to be following up the same procedure which we have used. So the formula is already back on, it is already familiar with you. So here we are doing September 2021. Question 4B. So the first requirement of the question is the budgets, the production budgets. The production budgets, right? We are not going to be forgetting. To get this, we are going to be taking our sales plus closing stock minus opening stock. And this should be for the finished goods. So in this case, we have to be looking at what is our sales. So we are dealing with two things here. We are dealing with M and K. So let us look on the sales in units. Sales in units for M is 2,000. For K is 1,500. Correct? Then we have the opening stock already given there. The opening stock. The opening stock is how much? So we less opening stock here. The opening stock of the finished goods, they have given us 100 and this 200. So the closing stock here, the closing stock we have been told in note number 4, opening stock for the material, sorry, the note number 3, the closing stock of materials and finished goods will be sufficient to meet 10% of demand. So 10% of 2,000 is how much? It is 200, and this is around 150. So how much is the units produced? Units produced. So the units produced here, I can see it is 21. And here should be around 1450. 1450 units. 1450 units. We can go to the requirement number 2. Requirement 2 of the question. We are talking about material usage budgets. The material usage budgets, right? And already we have been told we are using two components there. Material cost as follows. They have given you X and Y and Z. So the material usage, we said, you have to be looking on the units produced. So we are using X and Y, X and Z, sorry. X and Z. So here you're telling me, let us check on the units produced. Units produced, we have a note number, the material required for X in kgs, Z in liters. Yeah. So we are using M and K. right? M and K. So let us start with M. Let us start with M. The number of units required is 2100. So 2100, when you look on the number of kgs per unit, is 2. So here I multiply by 2. I put here 4200. Because 1 unit requires 2 kgs for X. And then I can see it requires 1 liter or 1 liter to make 1 unit for Z. So in this case, we take 2100 times 1, getting 2100. You are done with M. And let's go to K. When you're looking on K, you can see we are requiring 3 units to make for 1 unit for 3 kgs of X. So it means I'm going to be taking what? I'm taking 1450. We multiply by 3. 1450 times 3 is how much? 1450 times 3. You're getting 4350. Then on the other side, it's 1450. We multiply by what? We multiply by 4. Getting 5800. So how much in total needed for X and for Z? So when you do the material used, when you do your summation to get the material used, the first one will be 8750. And the other one will be 7900. So these are kgs, these are liters. Those are kgs, the other one are liters. Those are kgs, the other one are liters. Then you have the material purchase. Material purchase budget. We are going to be purchasing the components which we are using to make the units. So we are talking about X and Z. X and Z. So we are going to be taking the material used for both. So the material used here, we have talked about 8750. The other one will be 7900. We have said we add our closing stock. The closing stock. Then we less our opening stock. When you look on the requirement number 4, the examiner has given you the opening stock of the materials is 300 and 1000 liters. But in note number 3, we have been told very well there, the closing stock of materials and finished goods will be sufficient to meet 10% of demand. So you calculated that already. We have our demands here. Correct. So this will be 200. And there will be 150. What will be the material purchased? The material purchased, the first one will be 8750 minus the plus 200 plus 200 minus 300. We're going to be getting 8650. 8650. The other one will be 7900 plus 150 minus 1000, getting 7050. Those are kgs and liters. So once you want to get in shillings, we just need to multiply this by how much are we purchasing per material. For example, the material cost will be as follows. Here we are being given 100, and this one is 70. How much in shillings here? So the first one will be 8650, 00. The other one will be 750 times 70, getting 493,500. 493,500. 500. Then the last requirement here will be, the last requirement shall be the labor budgets. The easy units zetu, when you look on our units, they are passing through the skills. It's like I have seen semi-skills, skill and semi-skills. So we are picking the units produced, right? The units produced, we have 21. The other one we have 1450. So when you look on the skills, what do you require there? The labor hour required for skilled labor is 4 and 2 for semi-skilled for M. So we are starting here with M, which has 2100 units. So for skilled, we require 4 hours for every unit. We just need to multiply here by 4, getting a total of 8400. And for the semi-skilled, we require only 2 hours. So I take 2100 times 2 hours, getting 4200. Now, when you look on the other one, which is K, we are producing 1400 and 1450. You multiply by, what is the requirement for the skills? The first one will be 2. So 1450 times 2, we get 2900. What about the other one? I can see it is about 5. So 1450 times 5, getting 7250 here. All of these are total hours. So get the total hours for the skills. I say 8400 plus 2900. We are getting 11,300. Then the other one will be 4200 plus 7250. We are getting 11,50,000. 11,450. 11,450,000. 11,450,000. 11,450,000. Good. 11,450, sorry. Now, after you get that, remember the examiner is asking you in shillings. When you look on note number 2, we are being told the labor costs are as follows. Here we multiply by 120. And also here at the end, we multiply by 80 shillings. And at the end, we'll be able to get the total labor costs. In there, my space measure. So once we multiply, we'll be able to get the labor budgets in shillings, the labor budget in shillings. Any question? Any question? Any question there? Do we have any question? Okay, we don't have any question. Just wanted to look on something else here small. This is something small regards to the computation of flexible questions of flexible and fixed budgets. And first, I can give you an assignment here. Assignment, you can go and do May 2021. May 2021, question number 2B. Once you do it, share in our WhatsApp group. Once you do your assignment, you can share it in our WhatsApp group, in our WhatsApp. Someone is greeting me here. Oh, Laura is saying she doesn't have any question. There is a question here for flexible budget, but we have not yet done with it. the question was tested on November 2017, question 5A. 2017, question number 5A. Let us go there. May 2017. Should be November. Let me confirm. Correct. The question is there. November 2017, question number 5A. Someone to read, please. Someone to read. Someone to read the question, please.
Mexpar Limited manufacture a single product branded WYE. The following data relate to its operation for the month of October 2017. Have budget and actual. We have sales 60 units and actual 58 units. Production 60 units, actual 60. We have sales sharing.
Continue. I can see we are being given a very simple question there regarding to flexible budgets. And in that question, we are being given some items which we are not familiar with. So in this case, I just want us to look on how do we normally tackle this kind of question when it is already given in the question, when it is given in an exam. How are we going to approach the question? So when you're dealing with a question regarding the flexible budgets, the first thing that you need to be computing, and that is going to be helping you so much, is coming up with the flexing ratios. So when you're dealing with once again, when you're dealing with the flexible budgets, there is something that you need to understand very well, that the fixed costs are normally left intact. Fixed costs are never or are not flexed. Right? See the number of units produced. See the number of units produced. The number of units produced. The number of units produced does not affect the cost. Does not affect the fixed cost. Now, in this case, sometimes the students might be asking a very simple question there. Examiner has given you the sales in units and production. It means here we are going to be working with the sales. So the actual units, I can see they were 58,000. You divided by the budgeted, which was totaling to 60,000. So how much are you getting here? So 58,000 divided by 60,000, we are getting 0.967. 0.967. So I want us to come up with our flexible budget. So you're going to be arranging your question or your answer in this manner. You take your budgeted, right? Then we have your flexible or flex budget, right? Then we are going to be picking our actual budget. Then we look on the variance. We shall do variance later on. We look on the variance there. We look on the variance at the end. So when we start with the sales, for instance, sales, we have already given our sales here. Let me see. So the sales which we are being given is 60,000, but we have the selling price per unit, right? Even the sales are already given. So the budgeted sales are 840. 840,000. If you want to get the flex budget, you have to be taking 840. You multiply by 0.967, right? So 840,000 times 0.967. We are getting 812. 812 to 80. 812 to 80. What about the actual? When you look on the actual sales, they are 823. 823,600. So you're going, remember the purpose of flexible budget is to match between the fixed or what was budgeted and the actual. So in this case now, when we want to look for the variance, you're going to be doing a comparison between the flex budget and the actual budget. So in this case, when you look on the difference, to angalia if there is any improvement, 812 to 80 minus 823,600. Remember, we budgeted for 812 to 80 in terms of sales, but we sold more, 823,600, getting a variance of 11,320. In variance analysis, we say that is favorable. I'm very happy for selling more, right, than what I budgeted. After you flex now, you take 812 to 80, you compare with the actual budget, which is 823,600. The difference is 11,320, which is favorable to us. We are very happy to sell more than what we budgeted to sell. Now, let us look on the costs. Let us now look on the costs here. The cost in this case, we start with the direct materials. We do the direct materials. The budgeted was 240. 240. When you flex, I just need to take 240,000, you multiply by 0.967, getting 232. 232,080. What about the actual? The actual shall be the actual for material we have been given 246,000. 246,000. Let us look on the variance. I budgeted to spend 202,080, but the actual budget I spent 246. I know that you are not happy. So 202,080 minus 246,000. You spend more than what you budgeted by 13,920. This one we talk about adverse. That is adverse. It means that you are able to spend more than what you budgeted. You spent more than what you budgeted. From there, we go to direct labor. It's very simple. Direct labor. So under the direct labor, we have 300,000 budgeted. When you flex 300,000, multiply by 0.967, we are getting 290, 100. But when I look on the actual for labor, we are being given 288,000. So I budgeted to spend 290, 100 for labor. But actual budget or the actual spending was less than what I budgeted. by 2100. In this case, it's favorable. I'm very happy. I'm very happy. Now, when we are looking at the fixed overhead, we have said we don't flex the fixed overheads. So in this case, we have 135,000. You don't flex, you just carry that figure to flex budget. 135,000 shillings. Then the actual was 140. I know you are not happy. You have spent more than what you budgeted by 5,000 shillings. Right? This is advance. What is your profit? What is the profit now? What is your profit? What is your profit there? So let me start with the budgeted. This is your profit. So the budgeted will be 840,000 minus 240 minus 300 minus 135, getting 165,000. What about for the flex? It will be 812 to 80 minus 232,080 minus 290,100 minus 135,000, getting 155,100. We have 823,600 minus 246,000 minus 288,000 minus 140, getting 149,600. Even if you do, because when you're talking about the favorables, when you are putting the favorables here, it means these are positives. These are positive. So it means I can be able to take 11,320 minus 13,920 plus 2,100 minus 500, 5,000, getting 55. 5,500, which is adverse. When you talk about the adverse, it means back on your mind should be negative. Favorable is positive. So even if you take 155,100 minus 149,600, you can see you are getting a difference of 55. But in terms of the interpretation of the profit, you budgeted to get 155,100 in terms of profit. That was what was budgeted, but the actual has been less than what we budgeted. We are not happy, and that is why we here to find out our answer. It is adverse. Our answer is adverse. Our answer is adverse. That is how we normally do the questions of the flexible. But that is not the end. There is a different setup of the question which I will just be able to prepare. And come we do maybe tomorrow or any other time that we are setting up. So in that case, the only thing that is remaining here to conclude the budgeting and budgetary control, it is the cash budgets. And we cannot do it right now, we finish it. We just want to have enough time to go slow about it. So